first up, we have Adil. I believe I'm pronouncing that name correctly, Adil. And Adil asks, I wonder if you could do an episode on things to take note and how to run through a 10Q or a 10K to get the most out of it. Curious to hear how you guys do your thing, and I'm sure it's a topic many other listeners would appreciate. And Adil, I think that's a very good question. I mean, one of the things that we really stand for here at the Motley Fool is being able to help empower the individual investor to go do their own thing. And I mean, you can find all of that information out there if you just take a little time to do it. And if you understand what you're looking for and you can put together a little bit of a framework, you can kind of become your own analyst in many cases. So, Matt, why don't we start with you? What are a couple of the things when you're starting to look through a company's 10Q or a 10K, what are some of the things that you do to get the most out of it?
Sure. Well, I'll run through my top 5, but first I just kind of want to make one distinction that common misconception among investors is that the annual report and the 10K are the same thing, and they're not.
Right. That is true.
Right. The annual report is the chairman's letter. It's about 5 or 6 pages long usually. Just kind of gives the state of the business. You see some nice pretty graphs and stuff like that. The 10K is the 100+ pages of black and white that follows it.
That's the exciting stuff. That's the sexy reading.
That's what separates like the casual investor from like the educated investor, I'd say.
Yeah.
And so step 1, I would say read the annual report before you dive into the 10K because it's much more reader friendly.
There you go.
And it just kind of gives you, I'd say, 80 to 90% of what you need to know is in the annual report. And you don't even really need the 10K for most of it. But having said that, I'll give you my top 5. Okay, there's a bunch of different sections in the 10K. Just looking at it, just to give you an idea, Square's 10K is 138 pages. So it's not practical to read a 10K for every company you're interested in. So just to kind of narrow it down, the business description is usually about 10 pages long, but it's item 1 in a 10K. It's very worthwhile to read.
Sure.
Followed by the risk factors, which is the other part of item 1. So a business and its risk factors are 2 big things that every investor should read before buying a stock. The section on legal proceedings is very telling, especially in the financial sector, because I don't know any bank that doesn't have some type of legal exposure.
Of course.
The management discussion of the operations is another big one, is my other big one to look at. And one that's not on most people's list, but I like to look at is executive compensation.
Oh, yeah.
I like to know that, I like to know a company's directors have, the same interest as I do, that if I make money, they'll make money. It just kind of aligning our interests. I was looking through one company where the CEO only gets his full compensation package if the stock roughly doubled from current levels within a few years.
Oh, wow.
So that's right. And this was in the hundreds of millions that we're talking about. So this is a big motivation in a lot of cases, especially and this is kind of an outside the box thing to look at because this is kind of buried toward the back of it and is not usually in people's top few things to look at in a 10K. But I always make a point to read that before I invest.
Well, I mean, that's all very good stuff. And I tell you, I think what I will say, it's interesting having been here for close to 10 years now and ultimately having served all of my time here on the investing team and working just as an investor to learn how to get better. One of the things we did, now we went through this program we have called the Analyst Development Program, and it was about 1.5 years long where we did all sorts of things that really helped us not only learn to be good analysts, but good foolish analysts. And a lot of it comes down to just reading those SEC filings, right? I think the 10K and the 10Qs are always helpful. The 10K, which is once a year, the Qs, which are every quarter, always helpful. One thing we did in our analyst development class, we started this thing called the 10K challenge, which ultimately was, for us, we wanted to figure out a way to be able to get into look at a new company and try to determine as quickly as possible whether or not it's a company we wanted to continue looking at. And so as opposed to sinking all of this time into research and then having to deal with that sunk cost problem and trying to determine whether it's a company we need to cut loose or not, we figured if we could give it 1 hour, comb through the 10K to get a better idea of the business and whether it's one we really wanted to keep on learning more about. The 10K challenge helped us do that. And so we would just take literally 1 hour, and we would get a brief overview of the company. And like you said, there, the description of the business and understanding how they make money. And then we would comb through not only that business description and how they make money, but the risk section as well, and any, market data that they had to get a better idea of the competitive landscape for the business, and anything that we might learn there. And then ultimately trying to answer the question, do we feel like this is a good long-term business? And it's not just from the company perspective, but from the market's perspective in general. I mean, is it a growing market opportunity that we're pursuing? And so trying to answer some of those very basic questions really helped us. And it was a way to go through a lot of companies in a short period of time, and figure out whether they were companies we wanted to keep on researching, or, whether this company, hey, we just felt like it was just something we didn't understand and needed to go on the too hard pile, or there were just clearly things that we didn't like about it. And then you also mentioned management and compensation, and I'll throw another SEC filing in there that you can look at to learn more about that stuff. It's the proxy, the SEC form Def 14A, DEF 14A. That's a proxy statement that companies put out usually once a year, and has a lot of stuff in there regarding compensation and management and the boards and whatnot, governance. So another way to learn more about the company as well. So Deal, I hope that helps. It's certainly a topic we could probably talk about an entire show, but we won't do that.